super duper good morning to you. Start of a new day, new week, new month, and a new year. I'm excited to see what 2021 holds for us. Wishing you a year filled with happiness and most importantly, good health. Welcome to today's episode of Morning Wealth. We'll talk about three things. Quick 2020 recap, a new year, a new milestone for Bitcoin, and the week ahead. Looking at how stock markets performed in 2020, one would scarcely know that anything was amiss in 2020, let alone a once-in-a-century pandemic and a crushing global recession. The Dow finished the year strong, rising 197 points or 0.7% on Thursday when it traded the last. For the year, Dow gained 7% and S&P 500 rose 16%. The Russell 2000, the index of smaller cap stocks, gained 18% and Nasdaq Composite had a splendid year, rallying 43%. Only a glance at other asset classes would give you a hint that something was varied. The yield on the 10-year treasuries fell from 1.92% in the beginning of 2020 to about 0.92 by the end of 2020. And gold went up about 25%. The remarkable performance of equity markets is a testament to a few notable phenomena. Markets' ability to look past short-term disruptions to the long-term future. There's sometimes excessive faith in the power of technology and, of course, the exceptional sensitivity to actions of central bankers. Adding to the gains of 2019 gave the S&P 500 and Nasdaq the two best year runs since 1998 and 1999, the height of the dot-com boom. And for Dow Industrials, it has been the best two-year run since 2017. Given last year's challenges, many investors' good fortune has left them scratching their heads, is what is remarked by a strategist at State Street Global Advisors. He says the run has come with corporate earnings down in both years, which is 2019 and 2020, and revenue growth flat. Again goes to show the exceptional sensitivity to the actions of central bankers. The S&P 500 ended the year up 68% from its March lows after losing more than one-third of its value in about a month. Government bond yields, which fall as prices rise, still remain near all-time lows. Meanwhile, corporate bond yields also dropped after year-end turmoil. That means many bond investors ended the year with gains. The US crude oil prices are back near $50 a barrel after briefly dropping below zero for the first time ever in April. Gauges of sentiment from organizations including the American Association of Individual Investors show bearishness is at multi-year lows. Meanwhile, tens of billions of dollars have recently plowed into exchange-traded and mutual funds that track stocks. Both of these trends have preceded past pullback, signaling excessive optimism to some cautious investors. Some are drawing parallels to the outsized gains late in 2017 and early 2018 before the trade tensions and higher interest rates roiled the market. Remains to be seen. It's going to be an interesting 2021 for sure. A new year, a new milestone for Bitcoin. The cryptocurrency gained as much as 7.8% and topped 34,000 on Sunday in Singapore. The latest jump comes just weeks after it passed the $20,000 mark and on the heels of a 50% surge in December alone. The currency will be on the road for 50,000 probably in the first quarter, is what a managing partner and co-founder of Nexo in London remarked. Institutional investors returning to their desks this week will likely boost prices further, is what he remarked. On oil news, OPEC Plus must answer a tough question when it meets today to fine-tune output plans. How much supply can be restored without capsizing the recovery? Russia is keen to turn up the taps given current prices, while Saudi Arabia has so far been mum on its view. The group already has agreed to raise about 500,000 barrels a day this month, but it's gathering today to finalize its strategy for February. On some US and China news, the NYSE is booting China Mobile, China Telecom and China Unicom to comply with the US order penalizing firms with military ties. The move is mostly symbolic given the companies are thinly traded in New York, but may be a sign of more painful things to come. Bloomberg Intelligence warned oil giants Sinopec, PetroChina and Sinopec, of which American investors own about 10.4 billion worth of shares, may be next. The week ahead US political developments this week will have outsized implications for economic policy and markets. The two Georgia State Senate runoff races tomorrow will determine whether Democrats or Republicans control the chamber for the next 2 years. Congress also meets on Wednesday to certify Joe Biden's win. The event may see some drama as a group of GOP senators have voted to oppose the confirmation. The global vaccine drive pushes ahead as the UK rolls out the AstraZeneca and Oxford shot with about 500,000 doses ready from Monday, which is today. 2 million a week are expected from mid-Jan is what is getting reported at the Times of London. The US December jobs report is the big economic print for the week. Economists are calling for a 50,000 addition and jobless rate of about 6.8. Point to note, Bloomberg Economics is more pessimistic, expecting payrolls to slide by about 150,000 and the jobless rate to climb to 7% from 6.7%. Just to note, employers had added about 245k jobs in November. The data is due on Friday this week. The Fed releases minutes from its December meeting on Wednesday, with the market looking to better understand what policymakers want to see before scaling back QE. In terms of data from Asia Pacific, we'll be looking out for China's December Caixin manufacturing PMI, which is likely to have stayed strong after rising to about 54.9 in November, which was the highest in 10 years. Consensus is for a 54.7 print, with Bloomberg estimating a print of about 54.8. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.